FFIE, Faraday Future, whatever they're called. I never heard of this company until a few days ago, but they're blowing up all over social media. And as always, when it comes to inexperienced day traders and people who are talking about the stock market who really don't know anything about the stock market, there's a lot of misinformation. So let's clear up some things. For starters, I saw a video from someone saying we have to save this company. It has to be over $1 for 10 days in order to not get delisted and move to the over-the-counter penny stock markets. That's not true. This company is listed on the NASDAQ. NASDAQ has a 30-day requirement. You have to be over $1 for 30 days. But even still, moving it from the NASDAQ to the over-the-counter doesn't mean the company goes away. It doesn't mean that they're done, they close up their doors. It just means that they lose the cachet of saying to their shareholders or to their friends and family, our company is listed on the NASDAQ. But realistically, when this stock last week or 2 weeks ago was 60 cents, 80 cents, nobody took them seriously anyway. They were a penny stock. Now, it doesn't mean that a lesson can't be taught to the hedge funds for shorting a company 90% of the shares or 95% or 87% of the shares were shorted. It doesn't mean that you can't use it to teach a lesson to Wall Street. However, whatever funds were shorting it, I would almost guarantee you that an equal amount or more were trading on this stock today, driving it up to almost $4 and probably making millions. So yeah, while you're hurting a couple of hedge funds, a lot of other hedge funds with millions of dollars are probably piggybacking off of retail investors, making a quick buck. But I've also seen some people say this is a great company with strong fundamentals and Wall Street's just trying to hurt them. That is also not true. Let's take a look. Faraday Future doesn't even list their revenue on the top line here in their balance sheet. But their net income is negative $600 million, and it's gotten worse every year. And their cash and investments, well, I mean, take a look at this. They had $1 million. Whoops, hold on. They had $1 million. Then they had $530 million, and now they have 18 million. So they've spent a lot of money. And their total assets have dropped 41% in just a year. However, their long-term debt right here keeps growing. Look at that. And their free cash flow has just gotten worse and worse and worse. And by the way, this is their debt, $50 million, and their market cap is $70 million. That's not great. They almost have as much debt as the company is worth. I've also seen a lot of people saying we're holding until it goes to $10 or $100. Look, this company has 42 million shares on the market. That means if they hit $100 per share, they would have a market cap of over $4 billion with like no revenue. You saw their financials. It wasn't looking good. On top of that, people were saying, if we all hold, we can force a short squeeze and we can drive the price up higher. However, like I said, they have 42 million shares on the market, and they did 1.3 billion shares in volume today, which means really most people, probably the hedge funds, were looking at this as a quick day trade to make a lot of money, which they probably did. So yesterday I made a video about the stock, and I think it was around $2.50, and I said, please be careful. This thing could go dramatically higher or it could get wiped out. And this morning the comments were like, haha, it's $2.80 now. It's $3. It's almost $4. You could have bought it. You missed out. Don't worry about me. What I'm worried about is the guy who bought it at $3.90 and sold it at $1, which is where it closed, and got wrecked. Because they bought it because they saw some guy on social media saying, I bought it at $1 and I sold it at $3.90 and I made thousands of dollars. And they're like, I gotta be like that, but I missed the first run, so I'm gonna buy it at $3.90. Now, maybe they held it and maybe it's $8 tomorrow. You don't know, I don't know, nobody knows. But I would bet that a lot more people, unfortunately, probably bought it at $3.90 and sold it at $1 today or $1.50 and lost a bunch of money. The only people who I think were really making bank on this were the hedge funds. I get wanting to stick it to the hedge funds. I get wanting to teach them a lesson. But 1.3 billion in volume today on a stock like this, I'm walking away feeling like the hedge funds are the ones who probably made a lot of money off of this, except for maybe a handful who were forced to cover their shorts at a much higher price. Yes, I'm sure some people got hurt. I'm sure some hedge funds got hurt, but I would wager that a lot more retail investors got wrecked on something like this today. So one last time, please be careful. Oh, one last thing, circuit breaker halts. A lot of people were saying they're pushing the buttons, they're stopping the trading. That's not true. Circuit breaker halts are automatic. They kick in automatically when a stock has a dramatic surge to the upside or to the downside in price to stop the trading, to prevent people from getting hurt or for buying into something that's an unverified rumor, etc. You get the idea. That is very different from what Robinhood did, where they limited trading because they had liquidity issues, which they also shouldn't have been doing. Robinhood sucks. We all agree on that. But just to be clear, when the stock is getting halted, it's not the hedge funds going, halt the stock, prevent the little people from trading. That's inaccurate. I'm sorry, I keep ending the video and then coming back to this. The people on TikTok saying they don't want you making money is so stupid. These hedge funds don't give a shit about retail traders. People coming in buying 10 shares, 100 shares, making $50, a few $1,000. The hedge funds don't give a shit about you. They don't even realize you exist. They don't care. They don't care.